Alright, guys, welcome back to another YouTube live. If I am audible, please let me know in the chat. If I'm audible, just let me know in the chat, guys. If I'm audible, please let me know in the chat box. Alright, guys, also make sure that you like the stream as well. Hopefully, there's no disturbance from my end. Alright, guys, we'll wait for more people to join in. Then we will start with the doubts. Also, make sure that you like the stream, you share it with anyone that's trading or whatever, if friends or something. All right. Yeah. So, see what is going on in the market. In this environment, I would advise you guys to just not buy stocks for some time, right? Um, see, we are falling. We have fallen today as well. There is a demand zone here. All right. I am not saying that we are bearish, but for this to work, we need to see some sort of a consolidation here. So at least 1 or 2 days more. So basically, this week that will go. All right. So Thursday and Friday. Today is Thursday, and Friday will be gone. Maybe on Monday we see some progress, but obviously things can just fail as well. So we can simply, on the smaller time frame, since we're already downtrending, we can simply just start pushing lower. All right. So wait for the setup before you jump in. All right. We are not these. This is swing trading. We don't want to catch big moves every single day. Let's wait for some sort of sideways action here, and then we might go out. Again, guys, make sure that you like the stream. People who have joined in recently, we will take a few doubts. I'm expecting less people today because obviously uh, we don't do it on Thursdays, but let's see. Hopefully, we get enough doubts to talk about for a few minutes. All right, this one I was watching it actually, but the problem is, see, it's not bad. All right, but this is not tested. All right, and look at the fall from this point again and again. All right, so even if you get a move till here, which is probably like 6-7%, 5%, I don't think it's worth taking the stock. All right, we want it to just slow down between these two areas, this supply and this demand. So if it starts to stabilize here, then maybe we can start seeing some sort of an up move. PGIL, there is nothing yet. Let's wait for the EMA to catch up. I am also waiting for that. This demand is the weekly demand, so don't mind that. This is the last weekly demand, right? So this has no use in my trading, but I'm just as a reference point. So yeah, I'm waiting for something like this here, all right? The stock is not falling with the market as such, so it's not exactly breaking below this base at all actually. So maybe it just starts to go up from here itself, but don't trade that. All right, we are not here to trade that. All right. So Bank Nifty has fallen down, but again, Bank Nifty is at this weekly area of demand. All right. So Bank Nifty longs obviously only above this supply now. So I was expecting Bank Nifty to take off from here itself, which did not happen. We started to consolidate around this demand, and yesterday we broke down. All right, which is all right. So you have to notice this shift in the structure that happens. So if I hide these candles, now this structure is very bullish to me, right? But I know my exact trend reference point. So if this demand zone starts to go, I know that there is an open space below, which will immediately get covered up, maybe somewhere towards this low point. All right. So now if the up move fails, obviously I'll book losses in stocks that I've bought if they fall with the market. But here, if this starts to push, I know that as soon as this breaks, it will push straight down into this demand or maybe even the lower one. All right. And maybe even continue the downtrend from there. So this is a very important point in the market for me, which got broken on the downside. All right. So you don't have to predict things. All right. You just have to know. See, the market cannot go up and down forever. All right. It has to follow some sort of a rule book to move, because if everything is random, we won't make any money. That is true, but even the institutions won't make any money, right? So there is a systematic flow and outflow of money in the market all the time. So what happens is, instead of trying to predict the next move and putting all your chips into that, just be very ready to basically switch up as soon as that happens. Just don't be surprised in the market. So what happens is, give me 1 second. All right. So if you are not aware of this demand zone, if you are not aware that there is a lot of space below this demand zone, you might, when this starts to break, you might end up expecting a bounce from a random place, and that won't happen. And by the time the trend will change, by the time you will realize that the trend has changed, it will be somewhere here around the lows, and then you'll be like, now it looks weak. All right. So you're not ready, you're not prepared for these. You have no idea about these points in the market where things change, the trend changes at this previous demand zone. Similarly, this supply zone, when it broke out, it went straight to the previous supply zone. All right. So these things you have to know. All right. Now beyond this, if you try to put all your chips on one side, what will happen is, let's say you're trying to take a long trade here. All right. Now if you put all your basically bets on the long side, there is no other option but to book a loss here. All right. you have to book a loss when the market starts to fall. Now, instead of doing this, you see the market is bullish. You see the small cap indices are trying to break out. Even though the breakout fails, that is all right. I'm talking about this day. All right. I'm talking about this part. We didn't know that this will fall. All right. So how do you prepare for that? So instead of trying to buy only the index, which if it fails, it will fail. All right. There is no other uh, alternative. You have if you're only trading the index, you have to exit the index if it fails. Instead of doing that, you determine an overall range of the market, all right, and you see where you are in this range, and you buy stocks that are trying to break out, all right. So even if you buy 7 8 stocks, all right, 7 8 stocks is not much, all right. So even if you buy 7 to 8 stocks, some will fail with the market, maybe maximum will fail with the market, but let's say you end up getting that that 1 or 2 stocks in your portfolio which go back to demand and rebound very very quickly, break through a new high, all right. This might just protect you from whatever loss you have taken here, and obviously you're not buying 7 8 stocks on one day, so you're not booking losses in 7 or 8 stocks. Some will fall from a high which have already moved. So why I buy stocks is because it distributes my risk over time, all right. I don't want to be concentrated on one day. So obviously, when the index falls, everything will fall. I'm not saying that, but the main point is I am not buying 8 stocks on one day, like I'm buying the index on just one uh, in just one trade, right? If you have to take a long in the index, you just take it. That is your trade. But if I have to buy stocks, I won't buy 8 stocks in one day. Something I'll buy today, maybe 2 days later, I see something else, then I'll buy it. All right. So this distributes the risk over time. By the time this has moved out, if I'm buying here, let's say the market falls, let's say this breaks down with the market. So I will book a loss in this, but I won't be facing losses in this. It will probably just come down to my cost or something, or maybe even hit the target before that. And during these 2 3 days, where these first 2 stocks are hitting the target and the market is falling between these days, I might just book out a gain and overall I will be in gain. So let's say I book a profit in one stock, I book a break even in one stock. So even if this falls, I might still be green. I might still be in some gain. All right. But this will never happen if you just buy the index and you expect the index to work out. So that is a very high risk sort of trade environment for me. All right. If it works out, okay, I make some money. All right. I make a lot of money. But trading the index, expecting it to move according to you, it's very first of all, you have a lot of overnight risk, which is again divided into 7 8 stocks. 7 8 stocks, unless the market gaps down 3%, all 8 stocks won't fall together. All right. So that is distributed, and your you don't have to trade derivatives in stocks. You can just buy them, especially if you have a lower capital. Anything below 2 crores, 1 crore is a good enough capital for swing trading. You can find any liquid stock. All right. So that is distributed along these 7 8 stocks. All right. So, and the returns are not less. When the market moves up, you guys have seen how stocks go up. All right. So to make 2 3% in your portfolio, you just need a stock to move 20%. Any random stock has moved more than that in the past year. Maybe even in stocks move 20% in a matter of 2 3 days. It's not even I mean debatable. All right. So the only point is you cannot do this with a bigger capital because they are not liquid enough. So my entire point is try to, if you are not good with the index, if you're making money in the index, do it. All right. It's all about making money. Your profit, when it gets credited into your account, it's not written over it that you traded the index, so you're a better trader, or you traded stocks, you are a worse trader. All right. If you're making money doing anything, if you're making money doing astrology, do it. All right. But if you're not making money, all right, try something else. All right. Don't waste time. If it's not working for 3 months, nothing will change over the next 3 months. In 3 months, the market will show you everything. All right. So try something else. Try something that suits your psychology more. All right. That suits your temperament more. If it's if one position size, if just one position on the index in one direction is too much for you, try dividing it into three stocks. So Bank Nifty, it looks like it's going up. Instead of buying this, I will just look at some banks. All right. So instead of buying this, I will look at some banks, and banks are very liquid. All right. So banks, they are very liquid. So PSU banks, obviously everything is correcting. So maybe let's look at some private banks. All right. So if you see, let's see. So ICICI Bank is strong enough. All right. So I'll try to buy this bank, maybe with 1/3 half position size. All right. This is downtrending. So nothing here. So all these are downtrending. Look at this. All this is downtrending. So as soon as you see the overall texture of Bank Nifty, you will see 90% of these banks are below the EMA. Axis Bank was above it. Now it's below the EMA as well. All right. So 95%. Every other bank is below the EMA already before the fall yesterday. So when you see this, you will automatically get a feel for what's going to happen. All right. So my expectation was that ICICI Bank might give a big move, and HDFC Bank might hold this range and maybe go up. That is not happening. It is breaking through this, and now Bank Nifty is following along. So you have to be prepared. Uh, you have to be prepared with these scenarios in your mind already. You cannot be surprised when you see that Bank Nifty is falling because uh, because 95% of the stocks were already below the EMA, or 95% of the stocks were already in some sort of bearish structure, right? So so you have to be prepared about these things, and if you are not checking the structure of the underlying stocks, there is definitely some information you're missing out on. And once you start doing that, you will see that you can easily take better trades than Bank Nifty itself. So now that I see it, over the past 2-3 months, if you see, Bank Nifty has been downtrending, but something like SBI, we could have easily bought SBI here or maybe here. All right, take a loss here. That's already bought here. You made some money because SBI is trying to go up. All right, something like PSU banks are all trying to go up. So you could have easily bought PSU banks. A lot of people bought them as well. I know that we have talked about it multiple times, especially banks like IOB and all that. So these trades, a lot of people took it. So this is happening in a time when Bank Nifty is basically downtrending. All right. So my point is, if you start analyzing the overall structure in the underlying instrument, you will find much better trades than the index itself. All right. And this is true for every instrument, every index, all of it. All right. So currently Bank Nifty is this turned around from this supply again. This is the same supply right here. All right. It's turned around. We might be safe here. Let's see. Nothing bullish in Bank Nifty until we start taking out this demand. All right. So this demand is your this supply is your key supply. Unless it breaks through this, there is no point taking any long in banks or in Bank Nifty. All right. Or it will take the stocks in some time. In the last slide, we talked about how you manage a target of 10-15% and book the position. What will your criteria be when the stock reaches all-time high? My criteria is the same for all-time high stocks. Instead, it is actually only for all-time high stocks. I don't care about if I'm buying here. I am happy to exit here. All right. Especially this is a slow stock. All right. So by slow, I mean compared to the other small caps or mid caps. All right. It's a bigger stock. So if I'm getting 10-15% in 5 days, I am more than happy with it. All right. I will just wait for it to set up again, maybe set up again, and then catch the same move. It can be all-time high. It can be continuous all-time highs. I don't really care. All right. Because I have to do something consistently. All right. I cannot depend on the market to give me the bare minimum 15% move. All right. So see what happens is, if you try for a longer move, if you try for an all-time high stock, you're exposing yourself to these days, and 95% of your stocks will fail. How do you know that the stock that you have bought, just because it has hit an all-time high, it won't fall with the index? The index is also continuously hitting all-time highs. All right, so there is no differentiating factor when booking a stock. Once it has moved up, now nobody knows anything what is going to happen to the stock. All right, so you're exposing yourself to these risks. All right, thousands of stocks have, hundreds of stocks have made all-time highs. Just pick up anything. I think this is also an all-time high maybe. All right, so hundreds of stocks have made all-time highs. So if you don't book this gain right here, let's say you bought here for some reason, this 20%, you don't book this gain. Now it's been 3 months, the stock has not done anything. So you'll just waste your 3 months when you could have used this capital to maybe catch another 5 moves uh, of 15%. All right, so you have to find your sweet spot. All right, I can't be sitting in a stock just because it's at all time highs. I can't be sitting in the range for 3 months. 3 months in a bull market can change your trading capital completely. All right, so if a stock is going up, if my 15-20% is hit, I am out of it. All right, I don't care about what happens next. I don't want to rely on the market to, sorry, I don't want to rely on luck to give me that big mover. All right, so something like a Newland Lab, let's say, it's I think NEU. So I can't be waiting around for this stock. All right, because I don't know that this is going to happen. If I trail below some zone, let's say if I trail below some sort of zone, uh, see, look at this base right here. All right, look at this base. The last high on this base is the high right here. So this is the last high on this structure. So where is the demand for this base? The demand for this move is here. So the only logical place to trail this stock is below this. If you're trailing on a random candle, it is already hit and the stock did not even flinch. All right, it did not even move and your stop is hit. So the random candles, you can't put a stop. So now look at my entire trade will be gone if I wait for it. What if it falls back down with the index? My entire trade is gone. Hopefully this is clear with everyone, right? Look at this move as well. This entire move, the demand zone for this move is right here. I have to trail below this spot. All right. So I waste these many months and then it comes down and actually hits the uh, stop loss because it's a volatile environment, and then we go back up. So I'll just exit here. I'll buy it here again. Maybe I'll buy it here once. I'll cut out at cost or maybe a tiny loss, 1-2%, 3%, and then I'll buy it here again. Again, it goes up. Again, there is a setup here. We can buy it here again. And this time, actually, we bought it. We bought it here. We exited at cost because the market fell. Then this went up again. Some people bought it here as well. So yeah, so you get my point, right? It's not you cannot be making you cannot be relying on the market so much to give you something. All right, then you will catch one big move in one year. All right, so even if you're with 10% position size in that stock and you make, let's say, 6x 5x, which is a big number, you will end up making 50% of your portfolio after cutting out so many trades. All right, in a bull market where your stock is going 5x, a 5x move, and the impact on your portfolio is about 40-50%. That is nothing in a bull market. All right, you have to, I mean, I am not sure. All right, there is too much risk of the stock failing. It's better if you keep booking out at consistent gains. All right, so PGIL, we've talked about it. There is nothing in PGIL. RK Forging, I think it's already moved. Yeah, so RK Forging has already moved. This looks nice, but I think this has moved. So there's a dip. Maybe there is a buy trade here. All right, Precision Wires. I think this is also moving. Okay, so again, here if you see, the actual demand is here, but maybe avoid this. Maybe you can find some better stocks. All right, this is not contracting at all. Big candles. Structure isn't bad though. Hoodco, I think this is gone. Hoodco again, this is too far. See, this is what I talked about. Try to break out, failed. This is the demand zone. There's nothing in Hoodco. It's too far. It's too far up. Again, guys, make sure that you like the stream because 30 people are watching. There are only 14 likes. G shipping. G shipping. Again, it's gone. So this is a supply, right? So it's testing the supply for the first time. So you want to wait for it to basically come down and trade this range. All right. So when this entire range is full, then it will move out. It can obviously move out straight, but then your risk to reward is very bad here. All right. So if it contracts, then you will find a better risk to reward. This is the key to better risk to reward. Cochin Shipyard. Again, this is too far up. I think a lot of defense stocks, a lot of shipping stocks are setting up again. I saw it a few days ago. So these stocks, they are trying to set up again. All these defense and shipping stocks, you keep a watch on them, all right? They might set up at any moment. So HAL, BDL, these stocks are setting up again. So keep a watch on defense. Keep a watch on defense and jewelry stocks. Jewelry stocks are actually very, very strong. Not sure about the others, but the one that I'm watching, yeah, this is also not falling too much. It can react and start going up anytime. So keep a watch on jewelry and defense stocks. Two very opposite sectors. Defense is pure need and jewelry is demand. So basically pure luxury. So let's see if they move together or not. I mean, I'm not saying that these two sectors will move together, but it looks like they're setting up. So they might move. All right, so this is actually nothing here, bro. Nothing here. It's just falling. So you see, if you guys have trouble looking at this chart, you just switch to a line chart. So on a line chart, it's clearly downtrending. This is the demand zone, which is correct, but right now it's downtrending. So right now we have to wait for something like this for a right hand side. All right. So nothing in this one yet. All right, NDTV. I think NDTV is down today. Yeah. So yeah, this is done. You exit it if you're holding it. I think you bought here. Again, this is why I don't like buying these structures. So look at this bad price action here. All right, what's the point of buying this? There is no demand here. So there is no demand zone here. The demand zone is this one. All right. And if you guys are bought here, don't do this again. All right. So again, don't buy these structures which are very thin below. All right. You want a stronger base. All right. So something like this, a bigger base. So yeah, if you're in it, you exit it. If you are not, then there is no question. There is nothing in the stock. NIT Limited. NIT Limited has been in this range for a long time. I was looking to trade the stock here, but again, don't buy it. You can maybe find better stocks. It's in a range for a long time. I think NIT, there is another NIT which got demerged. This one is already gone. So this was also setting up, but this has moved out. This got demerged a few months ago. I remember this. Just a second. All right. Naukri. All right. Naukri again. There is no demand. There is no demand. The demand is here. All right. This is just a floating base in the middle of nowhere. There is nothing in the stock. But signed deal, and yeah, that was a good trade. A lot of people bought it in my server as well. Bought it at 695. Yeah, that is good. 695 is still on the higher end of this base. The ideal entry is about 670, 675, which is around this area. This is where a lot of people in my server bought it as well. It's a good trade. Try to enter in the meat of the base, all right? Don't try to enter in these thinner areas at the top. See, so what do I mean by the meat of the base? So if you just zoom out, you see where are the majority of the candles inside this base. So majority of the candles are here, all right? So try to enter in the middle of this, all right, but not around the top, which is your entry, which is 695, all right? Because price will try to bounce off from this high volume area. So even if you use the volume profile, you see volume profile is basically volume on a price. So volume, just a second. Okay, this is a single session. Just a second, I will show you guys. So why do I stress so much on a base? It's because maximum volume is traded inside the base. So majority of the volume is traded inside the base. So okay, so why is it showing one day? Let me try again. Okay, I'll just show you guys on yeah. So if you see this is the volume at this price. So at 675, this is the volume, the amount of volume. All right. So if you see, there is a big chunk of volume here. All right, which is right at the middle of the base. So this is why I stress so much on the base, because all the accumulation, all the trading that is happening, it's happening in the middle of the base. All right. After the breakout, look at what happens to the volume after the breakout. All right, falls off. So these are very easy to break through on either direction. But this area, once it is broken out, it becomes a very, very strong support, because there is a lot of trading, a lot of negotiation, if you want to say that, all right, between the buyers and the sellers, which is happening in this area. So that is why, um, just a second. Yeah, so that is why it is very important. So if you see, even on the smaller time frames, wherever there is a base, there is a strong volume uh, jump here. So there's a tiny base here, you see the volume is jumping out. And obviously smaller bases are less uh, are weaker because the time is less. Daily bases are much stronger, obviously. But if you see, when this entire base is formed, it takes 2 sessions to take through it. All right. And then when it's taken out, it tries not to go back into it and just trades it. All right. So this is obviously simple range theory, but that is because majority of the volume happens inside a base. All right. That is why bases work. All right. Especially these long daily bases. All right. This is moving out. 5 minutes में swing एग्जिट कर क्या 5 मिनट में स्विंग्स क्यों एग्जिट करेंगे? आई डोंट गेट इट. अभी का बताओ सर. जो फॉल फॉल हो गया तो लॉस बुक कर लो. व्हाट विल आई टेल यू? what special thing will I tell you to do? If it falls, you book a loss. There are ways to book. There are ways to protect yourself by booking lesser losses. All right, you cannot avoid a loss. If the index falls, the stocks will fall. But if you're buying stocks which are uh, if you're buying, let's say, if you're buying stocks which are here, then your stocks will fall more because there is more space. So you will maybe, if I'm booking a 3-4% loss, you're booking an 8% loss. That is the only difference. All right. If you're buying it here, expecting a breakout, you will book a bigger loss. That is literally the only difference. All right. So everything I do is to protect this downside. All right. All right. SOTL, Savita Oil, is already gone, bro. Um, it's too far up. See, these are the stocks I'm talking about. If the market falls tomorrow, this will immediately come here. All right. And this is 7-8%. All right. By the time you book, it will be down at 7-8%. There is nothing in this range. All right. There's nothing in this big space here. IRFC. IRFC is actually pulling back now, so I'm watching it. I'm watching this range very closely on IRFC. All right. If it sets up again, I will definitely get into this. It's the same thing that happened here. This is nothing new. And it's the same exact thing that happened here. All right. And it's the same thing that happened here, but this time the move failed because the market started to fall. All right. So it is moving exactly in the same way. Big move, big drop, range. Now either the range succeeds or it fails. That depends on the overall market health, may also the stock as well. Again, big move, range after a big drop, a lot of contraction. Again, a big move, big drop from the highs. So this drop is also big. So if you see, this is a 30% drop, and this recent drop is also around the same price. So it's nothing new is happening here, right? Again, we form a base. So let's see if we form a base here over the next 1 or 2 months. Then we look to buy into this stock again. Just a second. All right. Senko Gold. Senko Gold is also gone. I was watching it here. Did not dip. The demand is here. I did not want to buy it here. Now it's gone. But yeah, jewelry stocks are doing good. So that is a good thing to keep on watch. Solar Industries is also not bad, but I am waiting for something like this. So see, it's basically what is happening is this is your supply, all right, and the demand is here. So right now it is trading far from the demand without testing it, all right. So in these scenarios, this one shakeout can lead to a spike, all right. If it starts to move out without this, then it will fail here and it will form the same thing here. It might fail there, all right. So if the previous range, if you haven't tested any demand or something, if you haven't traded the entire range, it's highly likely that in the next one you will stop, all right. So this can happen unless the stock is just too bullish. In that case, I won't trade those stocks anyway, because if it goes up just like that, then there is no risk to reward, no entry, no nothing. DP Abhushan, I'm guessing it's a jewelry stock. Abhushan, I think. Yeah, so this is also good. Jewelry stocks are very strong. You keep them on watch. They have been strong since the past 1 month, 2 months. RK Forging, we've talked about all these stocks. Alright, we missed Bliss GVS Pharma. Alright, nothing here. Big fall, nothing. Now we need an entire range again. Avoid this at all costs. Alright. Again, guys, make sure that you like the stream. If you haven't, it probably will take you half a second. And just a second. Yeah. So let's have a look at Nifty as well. Nifty is still not breaking below the demand. So still not breaking below this demand. So if you see the structure on Nifty, this is your impulse move. This is some sort of loss of momentum. It pulled back. So this is the point that I want to break. I have talked about it before. On the previous test, this did not break, but it has come down again. Let's see if this time we go below it or we just hold it. All right, but Nifty is actually not still not breaking it. So Nifty starts going above this supply, we might see a quick move to the higher supplies here. So the level on Nifty future is 2250. So so this one basically. This is the level on Nifty futures. All right. If this starts to break, we might see a quick move on the upside. And small cap again, same thing here. We want this to break, which is 16,000 basically. This entire area. All right. So this is small cap 100. All right. So RK4, you have talked about it. There's nothing in this. It's too wide for me. Cornex microsystem. All right. Just a second. I think this is too illiquid. I cannot really talk about it. Just a second. Yeah, this is a bit illiquid. I Let's not talk about it. All right. Structure is good, but I would advise against trading illiquid stocks. All right, so we will stop here again and wait till you buy stocks. All right, wait for the small cap index to break 16,000, trade above it, and then buy stocks. Um, Hopefully, you're not holding stocks that are falling, because that is the uh, biggest sin in swing trading, obviously, because it will just eat your capital up, and you won't have anything to do with your money. You will just be stuck in a falling stock. So don't hold falling stocks and wait till the index settles down. We will buy more stocks. So, and you will also find more setups as well. So we'll stop here and I'll see you guys next Friday. Have a fun weekend.